koutou katoa. I mihi nana kia koutou kua tai mai ki te tautoko tēnei kaupapa. Nā mihi nui kia ira Dabla Norris te kai kororo o te rā tēnā koe. Ko Oscar Parkin toko ingoa, no mai, haere mai ki te tai ohanga. Well, welcome everyone, and it's wonderful to see you all join us online for today's Treasury guest lecture under the theme Fiscal Policy for the Future. And a very warm welcome to our distinguished presenter, Dr. Ira Dabla Norris. So I'm Oscar Parkin, a Principal Advisor at the Treasury here in Wellington, New Zealand, and delighted to be chairing this session. So our theme explores the role of stabilising sustainable and effective fiscal policy. The Treasury chose this theme for our guest lecture series as resilient and sustainable fiscal policy is essential to maintain and raise living standards of all New Zealanders. We also chose the theme to align with the focus of the 3 stewardship reports that the Treasury is publishing over 2025. In August, we published the final long-term insights briefing on sustainable and resilient policy over the economic cycle. And just last week, we published our long-term fiscal statement, He Tirohanga Mokopuna, and we'd encourage everyone to visit our website to read that document. And the lessons from this series will also inform our investment statement, which will be published soon. This assessment is focused on the range of potential impacts on the sustainability of our fiscal position and how to manage various risks. So invited speakers in the series are providing insights into how fiscal policy can be designed to support governments to meet their current and future obligations whilst adapting to changing circumstances and delivering value to the New Zealand public. So let me now introduce our speaker, Dr. Ira Dabla Norris, who we're very excited to have with us today. Ira is a Deputy Director in the International Monetary Fund's Fiscal Affairs Department. There she leads the work on the IMF's flagship report, the Fiscal Monitor, and on fiscal policy and AI. Since joining the IMF, Ira has worked on a range of countries and has published extensively in leading academic and policy-oriented journals on a wide range of topics. She's the editor of the book Debt and Entanglements. Her research has also been profiled regularly in leading global newspapers and magazines, and she's a contributing member of the Global Futures Council of the World Economic Forum. So today, Ira will examine global trends and political narratives that promote fiscal expansion, their implications for public debt sustainability, and the risks associated with high and rising debt levels. This is very topical for New Zealand. Whilst our public debt is relatively low by international standards, its upward trajectory has been concerning. Ira will present research showing how citizens often underestimate the scale of public debt and how these perceptions influence their expectations of future fiscal policies. Understanding these dynamics is important for designing effective communication strategies and building public understanding of sustainable fiscal policies. By linking political narratives, economic realities, and public understanding, Ira will provide insights into fiscal strategies that are both credible and inclusive and how to design them. This is vital for New Zealand to address long-term fiscal challenges, such as those stemming from demographic and climate change. So I'll now invite Ira to deliver her presentation, which will be followed by the discussion. We will use the Q&A function in Teams, so please post your questions there. If you have any technical queries, just use the standard chat function. And I'll read out the questions after the presentation that are posted in the Q&A function. So over to you, Ira, and welcome again.
Thank you so much, Oscar, and it's really an honor to be invited to give a talk in this very prestigious guest lecture series. I really wish I had just mentioned to you that I had so hoped to be there in person, but we'll save that for next time. So my talk today and my presentation really straddles 3 different areas. It straddles fiscal policy, the way macroeconomists think about it. It straddles political economy, and it also straddles behavioral economics. And I'm going to try to convince you that all 3 of these things need to be thought of together. So first, let me start with the debt side of the story. So let me start by painting a picture of the current global situation. Public debt levels are elevated. Global public debt was around 100 trillion, which is about 94% of global GDP in 2024. Looking ahead, debt is projected to keep rising and to approach about 100% of GDP by 2030, so by the end of the decade. Now, the world's two largest economies, China and the US, along with several major economies, France, the UK, South Africa, and a few others, are largely driving this increase to levels that we haven't seen since war times. And while public debt in many other countries, including New Zealand, is expected to either remain low or broadly stabilize, it still remains well above the levels we've seen prior to the pandemic. So getting fiscal policy back on track is essential for many countries, not just because debt is high, but also because structural spending pressures are rising. Population aging, pension costs, healthcare costs, energy security, economic security, defense spending, all of these will demand more. And this is not just about numbers. It really calls for a deeper understanding of the political, social, economic forces that are shaping policy choices. So that was my motivation for bringing these various strands of work together. So my presentation today will unfold in three parts. First is really diagnosing the fiscal reality of where things stand as we speak. And I'm going to draw upon recent IMF fiscal monitors and begin by highlighting the true scale of fiscal risks. Spoiler alert, it's worse than you think. Debt ratios are high. In many countries, interest rates are either rising or remain high, and fiscal space is shrinking. Room for fiscal maneuver is shrinking. And so the fiscal arithmetic, if you will, the fiscal is getting more challenging. Second, I'm going to explore the political economy behind fiscal policy. And the question that I'm interested in exploring is, has the political environment across many countries shifted in ways that make, say, perhaps fiscal adjustment harder? How do political parties frame fiscal issues? And do these narratives actually influence fiscal outcomes? And finally, I'm going to look at how the public perceives debt and fiscal adjustment. And this matters because public support or resistance can determine whether reforms succeed or stall. And if citizens underestimate debt levels or expect someone else to bear the costs, then it's going to be very difficult for governments to undertake reforms. So understanding this perceptions is really key to designing credible and sustainable fiscal strategies. So first, let's look at the true scale of fiscal risks that we see. And there's several upside risks here. First, debt could rise further because we're in a highly uncertain environment. So quite apart from the long-term social spending pressures that are emerging or that countries are contending with or will have to contend with, we're in an uncertain environment. And this is not just about trade, but also about the future path of fiscal policy in systemically important economies, but also other economies. And this uncertainty really clouds the growth outlook. So the idea that what we've seen is that growth prospects have been marked down across many countries in the wake of the pandemic, or even prior to that. And now we have this uncertainty that clouds the growth outlook. At the same time, we saw that interest rates were low between the global financial crisis and the pandemic, but now there's considerable uncertainty about where rates are headed. We're also no longer in this period of massive central bank bond purchases that kept yields low. So the uncertainty is that rates could stay higher for longer, pushing up debt servicing costs in many countries. And so taken together, what economists call the R minus G dynamics, the difference between the real interest rates and real growth rates, could turn adverse, making it harder for countries to manage debt. A second reason that debt could well be higher is that there tends to be an optimism bias historically in debt projections. Our analysis covering the period between 1990 and 2021 shows that realized debt to GDP ratios in many countries tend to be significantly higher than is projected over the next 5 years. And there are two main reasons for this. Firstly, optimistic growth projections. Inherently, we all understand that crises and pandemics are unforecastable. And secondly, realized fiscal adjustment paths typically tend to fall short of plans. And this bias can be seen even in advanced economies with outcomes exceeding forecasts significantly, as you can see from this chart, over a 5-year horizon. So if history were to repeat itself, debt could rise by 8 to 15 percentage points of GDP above baseline projections in advanced economies by 2030. So what we wanted to do in the fiscal affairs departments, we wanted to find a parsimonious way of showing some of these risks to growth, to interest rates, to uncertainty. We wanted to find a parsimonious way of showing what the distribution of risks around the baseline forecasts looks like. And this is sort of our debt at risk approach. And you can read about it. We have a paper out on this, the methodology that underpins this. So instead of just looking at a point estimate, we looked at the entire distribution of risks. And here I'm showing you the distribution, the probability density function for global debt. And what our analysis shows that risks around global public debt, the first figure that I showed you, are pretty large, and they're tilted to the upside. Global debt at risk at 3 years ahead, so in 2027, defined as the 95th percentile of the distribution, which is adverse shocks to growth, interest rates, massive uncertainty, what have you, is estimated to be 117% of GDP. And this is about 20 percentage points higher than baseline projections. Right? So we have a story where public finances are stretched in many parts of the world. Many countries haven't come back to where they were prior to the pandemic. At the same time, you have these large spending pressures looming in many parts of the world. So bringing the fiscal house in order, even if you have low levels of debt, is sort of the call of the day. So in my next, so that's the call for the day. And some might ask, well, okay, so what? Debt has been high for years in many advanced economies. Why is there a greater urgency today to focus on these issues? Well, in today's environment, loose fiscal policy can raise term premium as markets begin to question long-term debt sustainability. And it's not just a domestic issue. Policy uncertainty in major economies and systemically important economies can spill over. As the chart on the right shows, sovereign bond yields in advanced and emerging market economies tend to move closely together. And this highlights how external shocks can amplify fiscal and debt risks across countries. So getting the fiscal house in order is important. The question is, why are we here and where are we headed? So to answer that, let me turn to the second part of the story, which is how do fiscal narratives and electoral dynamics shape fiscal outcomes? And understanding how political parties frame fiscal issues or the narratives that they tell and how these narratives resonate with individuals, with citizens, is really kind of key to anticipating the space and support for fiscal reform going forward. So I'm going to start with a conceptual relationship that was laid out in a recent paper with my colleagues Yongchuan Chao and Enrico Di Gregorio from the IMF. We propose a dynamic two-way relationship between fiscal narratives, or what we call fiscal discourse of political parties, and fiscal outcomes. So on the first sort of pillar, if you will, the first leg, macroeconomic conditions, such as surges in debt, recessions, or institutional reforms, such as adoption of fiscal rules, can influence what political parties emphasize in their narratives, whether this is calls for austerity, responsibility, or countercyclical policies. At the same time, if you look at the second leg, or the second arm of this relationship, as new fiscal ideas gain traction, in discourse gain traction, they actually shape policy decisions and public expectations. So there's this feedback loop between the two, and it could be through reputation, through voting, what have you. But the point is that there's this dynamic relationship between discourse and the macroeconomy. So we wanted to capture this, and we wanted to formalize this conceptual idea. And to do so, what we did is we used data from the Manifesto project, which collects political manifestos from a large number of countries. And these manifestos are quoted, and they're coded to quantify political parties' views across a broad range of issues. And also one of those set of issues are fiscal positions, both across countries and across parties and over time. And so what we did is we looked at these manifesto positions, and we looked at the statements that are classified to reflect support for either spending expansion or fiscal restraint. And so here, the figure that you see is an example from the Republican National Convention Platform Party Manifesto in the 1980s. And so these statements are coded, and we constructed two proxies for fiscal discourse. The first is expansion discourse, and in a very narrow sense, we first zoomed in on the share of platform content that pertains to advocacy for higher welfare spending, higher education spending, higher stimulus spending, and social and other types of spending. And this was a narrow variable that we looked at, but we also considered broader expansion proxies, such as spending on defense and infrastructure, climate change, and what have you. In our narrow definition of restraint discourse, captured the share of the platform content that calls for outright reductions in deficits, or outright reductions in debt, or limiting welfare outlays. And our data drew from about 4,500 political manifestos and about 720 national elections that were held over the 1960 to 2022 period. And this covers 65 advanced and emerging market economies. For a handful of countries, we actually have data that goes back. We can actually analyze the fiscal content of party platforms going back as far back as the 1920s, which is very interesting. Okay, so let's start with some broad patterns in our data. So here, what I'm showing you are two maps. The one on the left shows support for fiscal expansion over the entire period, 1960-2022, and the right shows support for fiscal restraint. Across all available political manifestos, expansion discourse, which is coded in red, or shades of red, makes up a much larger share of platform content compared to fiscal restraint, which is coded in blue. So when you look at the numbers over this entire period, political parties of all stripes devote on average about 13% of their platform content to expansion discourse, and only about 2.5% to fiscal restraint. The data also reveals important long-term patterns in political preferences. Political manifestos or party platforms have an increasing share of statements favoring public spending. At the same time, restraint discourse, the share of political manifestos calling for an outright reduction of budget deficits or the limitation of public spending, has declined across the board over time. Moreover, this is happening at the same time as political red lines on taxation are becoming more entrenched in many parts of the world. And these patterns that I've just talked about are evident across both advanced and emerging market economies. As you can see from the left-hand side chart, the right line shows advanced economies, and the right and orange, sorry, the red line shows advanced, and the orange line shows emerging market economies, and the blue again shows the restraint discourse, how it's declined over time. And this is also evident regardless of party ideologies, whether it be left or right, as is seen in the figure or the chart on the right. So, in other words, there's this expansionary narrative or expansionary discourse seems to permeate public discourse or across countries, across political parties, and over time. So we then ask, all right, given these stylized facts, do macroeconomic conditions matter? Is fiscal discourse responsive to the general state of the economy, to the country's economy, or if there are major fiscal events, such as if a country introduces or adopts a fiscal rule? So think of the first arm of this conceptual relationship that I had shown you earlier. And the charts here use an event study analysis. So we have a control group where countries did not adopt a fiscal rule. We have countries that did, and we try to discern whether any differences in pattern in fiscal discourse for expansion or restraint between the treated, if you will, and the control group. And what we find is that the adoption of fiscal rules that impose some kind of operational constraints on the budget balance or some other type of fiscal rule tend to result in a higher share of pro-restraint discourse over subsequent election cycles. And this is shown in the blue line. There's the chart on the right. Support for restraint does go up in a statistically significant way, but the widespread adoption of fiscal rules does not result in curtailing pro-spending rhetoric, and that can be seen in the left-hand side chart, suggesting that their success of these kind of fiscal rule adoption of these types of rules or changes in macroeconomic conditions only have a partial effect or only make a partial dent in the rhetoric and in the expansionary rhetoric that tends to permeate discourse. Okay, so now we've shown that yes, discourse can be dented partially by macroeconomic conditions, by changes or by major fiscal events, but it may not be lasting. The change in discourse may not be lasting. So now let me turn to the second leg of this relationship that I showed you, which is how does fiscal discourse influence actual fiscal outcomes? Because in the end, this is what we really want to understand. Is this going to translate into something tangible? Is this going to result in higher spending or higher deficits and such? So specifically what we did is we examined how fiscal outcomes evolve after shifts in net expansion discourse across election cycles. And what I mean by net expansion discourse is the difference between the share of expansionary rhetoric and restraint-oriented statements in party manifestos. So we looked at a net discourse, the difference between these two, and so the chart here shows the impulse response functions of fiscal deficits. So how do fiscal deficits change? And when there's a change in net fiscal discourse, and we use local projection methods to estimate this. And what we find is that a 1 standard deviation increase in the share of net expansion discourse from one election to another in a country is associated with a gradual rise in fiscal deficits, reaching about 0.5% of GDP over the medium term, so over 5, 6, 7, 8 years. Okay? And this is true for the full sample period that I showed you, 1960 to 2022. When you zoom in and you sort of focus in the post-1990 period, we find that the effects are even larger. So there's an association here, clearly, between greater expansionary rhetoric and how it translates into higher fiscal deficits. So then we want to see, what is this being driven by? Which components tend to move when rhetoric turns more expansionary. And we find that this fiscal deficit increase is driven primarily by a gradual expansion of spending initiatives rather than tax cuts. In particular, as we see in the left-hand side chart, the deterioration in the fiscal deficit is linked to higher primary spending. Right? So you have an increase in net expansion discourse that translates into higher primary spending, and that in turn leads to higher fiscal deficits. Very interestingly, among a select group of OECD countries, there's this rise in primary spending is largely being driven by a significant uptick in the share of social spending as a share of GDP, as can be seen in the right-hand side chart. And here, social spending is not just spending on pensions and entitlements, but it's all kinds of transfers and tax expenditures and such. So we see that there is this mapping or a very clear association, if you will, between the two. So bottom line, expansionary rhetoric, if it becomes politically entrenched, would lead to sustained higher spending, persistent deficits, and rising debt. So let me now turn to very briefly to this issue of what I've shown you. Is this really an association? Is it a causal relationship? Can I make a claim that this increases in expansionary discourse actually translate into higher deficits and debt and higher social spending? So very quickly and very briefly, we actually studied this in the paper. We said carefully, and we did this by using an instrument. So we ran the same estimation, but as an instrument for identification, we used foreign political rhetoric on fiscal policy, especially from ideologically similar parties. And we found that this is a very useful instrument to think about how this can shape domestic fiscal discourse. And we use this instrument, this ideology-based instrument in the regression analysis, to show that we can actually make a causal claim. Expansionary political narratives translate into higher spending and deficits. So this is a story about political incentives. This is a story about expansionary discourse, or what politicians are, how politicians talk about fiscal policy translating into higher deficits, higher spending. This takes me to another perspective on fiscal narratives, which is, how is it the public or citizens perceive public debt or the need for fiscal adjustment? How we wanted to look at narratives from both sides. What do we see from what the manifestos or the platforms are saying, and what is it that the public perceives about fiscal policy? How does it understand fiscal relationships? How does it think about debt? And this can help shed light on why perhaps there's an upward drift in spending that we saw across countries, and perhaps why there are such entrenched political red lines on taxation. So to answer this question, I'm going to talk about a new paper that was actually just released last night or today. And this is a paper that was co-authored with Francesco Bianchi, who's a professor at Johns Hopkins, and my colleague Salma Khalid from the IMF. And so this part of my presentation is going to be based on this paper. And what we try to do is we try to shed light on this very question. How is it that public perceives fiscal relationships? What do they understand? And how is it that they perceive debt, taxes, spending, and such? And so to capture this kind of sentiments, we conducted nationally representative online surveys across 13 countries. We had over 3,000 respondents per country. And the countries really varied depending upon the level of debt, the trajectory, the future trajectory of public debt. The surveys were administered by the polling company YouGov in the respondents' native language during spring 2024, so last year, and it targeted individuals that were 18 years and older. And the surveys are pretty comprehensive. They really paint a picture of what people understand, what their prior beliefs are about fiscal policy variables, about it collects comprehensive information on demographic characteristics. It also embeds an information experiment. And this is really where the behavioral aspect of the story comes in. And our sample includes countries with relatively low debt levels, such as Netherlands and Australia, but as well as those countries where debt levels are rather high, such as Japan and the US. So that's the survey methodology and sample. So let's now turn to what does the survey tell us about how people think or what they understand. And one of the key stylized facts that emerges from the survey is the presence of sizable knowledge gaps regarding the relationships between fiscal variables. And this is shown on the left-hand side chart. So only 54% of respondents in the entire survey, so we have a sample of 27,000 individuals from around 13 countries, correctly identified the link between fiscal deficits and public debt, the relationship between that. Just 50% understand the relationship between government spending and the deficit. An even lower number, only 47%, correctly identified how taxes relate to deficits. So to quantify this knowledge, what we did is we collected how they think about or their perceptions about deficits and public debt, their knowledge about tax revenues and deficits, and we constructed a knowledge index. And then we wanted to understand what are the correlates, what are the demographic characteristics that correlate with greater knowledge of fiscal relationships. And this is shown in the right-hand side chart here on this slide. And we find that greater fiscal knowledge is associated with age, education, and financial savvy. In other words, older people, those who are more educated, those who own financial assets such as stocks, bonds, and such, tend to have greater knowledge of fiscal relationships than others. We then asked respondents, how do they perceive the debt levels in their countries? And so I'm showing you two charts here, how they think of current debt levels and how they think about future debt levels. And the omitted response categories don't know or unsure here. What's interesting is that across the board, most respondents, regardless of the actual debt level of their country, believe that either debt is high, somewhat high, or very high. And very few tend to think that debt is low, irrespective of the country. Interestingly, Japan, which has the highest public debt in our sample, so all the countries here are ranked from lowest level of debt to the highest level of debt to GDP in 2024. And so interestingly, Japan, which has the highest public debt in our sample, has the smallest share of respondents who believe that debt is high in their country. When you look at future debt levels, only a small minority of survey respondents across countries expect that debt will decline. Most believe that debt will either remain the same or it will increase. And Argentina here, interestingly, is a notable exception where people actually believe that debt will decline. Now, the paradox is that while most respondents believe that debt levels are high, they tend to underestimate the actual numerical value. Actually, many don't provide a numerical estimate, but those who do tend to underestimate the actual numerical value. And this chart illustrates this gap. The purple dot shows the actual debt level, while the line inside each box represents the median estimate from respondents. So the box, you see the entire box and whiskers shows the range of estimates. And this gap between perception and reality widens in countries with higher debt, as can be seen from moving from left to right in the chart. We also asked respondents about their perceptions of government taxes and government spending in their country. And so the The left-hand side chart shows their perceptions of current tax levels. The right-hand side chart shows their perceptions of current spending levels. Across all countries, a strong majority, about 70%, believe that tax levels are either high, somewhat high, or high. In Brazil and Italy, it's nearly 70%. Very few respondents viewed taxes in their countries as being low. But views on government spending, interestingly, show much more variation, as seen in the right-hand side chart. For example, in Japan and the UK, less than half the sample believes that spending levels are high. So there's much more variation on this, on the way people think about, or their beliefs about spending across countries. So after testing respondents' knowledge of fiscal relationships and capturing their prior beliefs about debt, about taxes, about spending, we then asked respondents to assess the likelihood of fiscal policy changes in their countries. And we asked them to assign a probability. 50% or more is high, 75% or more is very high. And what we show here is the likelihood that respondents assigned to policy changes in their countries. So what's interesting is that in most cases, respondents expect taxes to rise further, with very few expecting tax cuts. And this is irrespective of the debt level in a country. And this perception, I mean, it's interesting, this perception holds even in countries where tax levels are already viewed by respondents as being high. Among respondents who expect taxes to rise, most believe that the burden will fall on the middle class and small businesses. I mean, more generally, there's an expectation that taxes of all kinds will increase, but on average, it's going to fall on the middle class and small businesses. And what's also interesting is that we find that there's evidence of loss aversion in expectations of tax changes. So in other words, respondents who tend to self-identify or who show their income as being middle income are likely to believe that future tax increases will target their own income group. Similarly, high income respondents are more likely to expect increases in wealth taxes or increases in taxes on large corporations. So what happens when we look at the spending side? On the spending side, as I noted before, the perceptions of the likelihood of spending cuts vary much more across country. So when you ask respondents, how likely, given what you think, how likely do you think is the government will cut spending, there's a large variation. But most, on average, assign a very low, so there are fewer respondents that assign a very high likelihood to, I should say, to spending cuts in their countries. In countries like Australia, Poland, Brazil, Canada, the US, and Japan, most respondents believe that there's a very low likelihood of spending cuts. And in contrast, in some other countries, such as Netherlands, Argentina, respondents are more likely to expect cuts in government spending. When you zoom in on, well, when they expect spending to be cut, what categories do you think they will be cut? When you ask them this question, they broadly think that social programs and infrastructure, education will be cut. And here again, we see evidence of loss framing. Respondents tend to expect cuts to programs they personally benefit from. So lower income individuals expect reductions in education, while retirees receiving benefits expect pension cuts. Furthermore, lower income respondents are more likely to expect cuts to social programs compared to their higher income counterparts. So clearly, both on the side of taxes and on spending, when people think about fiscal adjustment, at least in our survey suggests that they tend to think that it's the burden or the incidence of this is going to fall on them. So then we wanted to ask, well, okay, how do these beliefs or expectations of tax changes and spending cuts depend upon their demographic characteristics? How do they depend upon their knowledge? How do they depend upon their beliefs of about policy variables. And this is shown in the left-hand side chart, which is just the correlations, shows the simple correlations of how all of these variables impact expectation or are associated with expectations of tax increases, I should say. And we find that expectations of tax increases are strongly correlated with age, with asset ownership, with social media use, and prior beliefs about taxes, spending, and such. And on the right-hand side chart, we wanted to see, okay, well, what are the strongest predictors? If you were to look at a whole host of characteristics, people's beliefs, their knowledge, their demographic characteristics, what are the strongest predictors of their expectations regarding tax increases? And we find that the strongest predictors are not necessarily demographic characteristics, but their belief that their expectations of tax hikes are predicted most by their beliefs that debt levels are high and rising, that current tax levels are already high, as well as trust in government. Now, when we look at spending cuts and what beliefs or what matters for spending cuts, we find that here country-specific characteristics or country-specific factors are really the strongest predictor of what drives people's beliefs about spending cuts. And this could in part be explained by the fact that there's a lot of variation in the nature of the social contract in the countries that we covered. So some countries more generous welfare systems, others less so. So there's a huge variation in sort of country specificities and institutional factors that could be driving this result. But what really emerges is that in addition to sort of country specificities, what drives beliefs about spending cuts is also trust in government. The left-hand side chart shows that if you trust your government, you're more likely to think that spending cuts will happen, given your priors and such. And it's also interesting that it works in opposite directions as in the case of taxes. So greater trust in government increases expectations of spending cuts, but it lowers expectations of tax hikes. So in some sense, it sort of makes you a little bit more, I guess if you were to extrapolate from these results, one could argue, well, perhaps it means that you are more likely to accept or understand the need for fiscal reform and fiscal adjustment. So to bring it all together, our survey revealed three key insights. Firstly, public misperceptions about debt levels, their trajectories are common, and their understanding or knowledge about fiscal relationships tends to be weak. This is true for advanced economies. This is true across emerging market economies. So this is sort of ubiquitous. Secondly, we found that people's perceptions about debt shape expectations of tax increases and to a lesser extent, spending cuts. And finally, our survey also showed that most respondents recognize that fiscal policy must adjust to address debt burdens or must adjust, some kind of reform is needed. But what we wanted to understand is, okay, well, how does information affect people's beliefs? So in a sense, if we nudge people, are they going to change their expectations of reform efforts in the right direction? So we ran an experiment. And a randomly selected group of respondents in each country was shown what the actual debt level of their country was, say in 2023, as well as the trend or the trajectory that was expected in the future. And the control group in the same country received no information. And we found some very interesting patterns across different groups of countries. In countries where debt was stable or falling, informed residents were less likely to expect tax increases. So in other words, their fears perhaps of tax increases were attenuated, especially those who previously believed that debt was high. That was their prior. And in countries with rising debt, informed respondents were more likely to expect spending cuts. And this is especially those who underestimated debt levels in their country. So overall, our analysis suggests that providing factual information could possibly shift expectations, but its impact may also be limited by gaps in understanding of fiscal relationships. So let me conclude with some key takeaways from my talk and the research that I presented to you. First point is that public debt is high, rising, and increasingly risky. And if history is any guide, the trajectory of debt will be worse than what countries project today, and considerably so. So even in countries where debt levels are not so high, fiscal risks are elevated currently, but there are also large spending pressures that are mounting that countries will have to address. A second takeaway is that fiscal discourse is shifting towards pro-expansion platforms, with budget discipline increasingly sidelined. And this trend potentially reflects broader political incentives and a present bias that is sort of inherent in policymaking, which tends to favor short-term gains over long-term sustainability. And finally, our research showed that public perceptions matter. Limited understanding and misperceptions could potentially delay needed fiscal reforms. And here, providing the right kind of information possibly could help shift beliefs. So what's the path forward? I'm not going to be talking about specific, adjustment strategies that countries should follow, or what is needed to make policies more sustainable, or the kind of pension or other types of reforms that are needed. But I'm going to leave you with some broad thoughts. And our research points to a strategic agenda for sound public finances. First, we need a pivot. Fiscal sustainability over the long term must return to the center of political and economic narratives. Second, perhaps it would behoove to make an investment in fiscal literacy. So targeted public education could help potentially correct misperceptions that the public holds, and also clarify fiscal trade-offs. The third implication, I would say, is that improved communication, transparency can make a difference. And here, governments could share clear, accessible data and potentially even use behavioral insights to communicate effectively. And finally, my final takeaway would be building trust in fiscal institutions. So consistent policy, inclusive dialogue, accountability, and here in some countries, independent fiscal councils can play a role, can potentially make a difference. And it's shown in our research in the World Economic Outlook, but also in the 2025 April Fiscal Monitor. I mean, trust is really essential for public support of difficult fiscal reforms. So let me stop here. Thank you very much.
Well, thank you very much, Ira. That was an incredibly broad presentation with some fascinating insights across a whole range of dimensions of fiscal policy, and also, might I say, clearly communicated as well, perhaps consistent with your theme. So if those folks in the audience want to post their questions into the Q&A chat function, I will read them out, and I can see there are already some questions coming in, and so just encourage people to keep doing that. Ira, I guess your talk, you started off talking about fiscal risks, which were globally are looking very concerning. You then informed us that fiscal discourse matters, but has tended towards less sustainability, more expansion. And then you talked about perceptions of fiscal policy, which points to a lot of knowledge gaps on behalf of citizens. So that's sounding quite concerning on its face, but then it was perhaps a slightly more optimistic note to end in terms of some areas where an agenda could perhaps support greater fiscal sustainability over time. So Perhaps I just ask a question, building on your final point around fiscal institutions and frameworks. I guess what you see as the sort of key insights there in terms of what might help shape the fiscal discourse. I sort of reflect on New Zealand's fiscal framework, which is actually built around principles of fiscal responsibility rather than legislating for specific numerical binding rules. And I guess we've seen one potential advantage of such a framework is that we do have numerical targets, but they are targets that the government itself must formulate consistent with the fiscal standards or principles. And I guess there's a communication angle to that. So the government must communicate its own fiscal strategy, and it sort of led to a degree of buy-in on the part of policymakers because the fiscal rules or targets have been formulated themselves. They feel perhaps a bit more accountability for following through. But on the other hand, potentially less binding if the broader political economy shifts away from sustainability. So just interested in any reflections you might have on fiscal frameworks.
No, I think thank you for talking about the New Zealand case. I mean, I should say that to advertise, there was a new paper that was released by the IMF by my colleagues, a new staff discussion note. It's called Fiscal Guardrails. I hope you will look it up. That was just launched last week. We actually launched it last week, and here we actually took a pretty comprehensive look at sort of the state of play. A lot of countries have adopted fiscal rules around the world, and sort of there was a bit of a fashion to adopt fiscal rules and sort of talk about these frameworks and what have you. And what we found is that, and that's the right direction. We do believe that it doesn't have to be necessarily legislated in law. It doesn't, you don't really need it to be legislated to abide by these rules. In fact, what we found is that while countries have adopted rules, with the pandemic and other shocks, they sort of tended not to follow their rules. So coming back to their own rules was problematic. So they were not adhered. They're not being adhered to, despite having these rules on paper. And so the IMF has long championed, fiscal transparency. Has long, talked about the importance of having a medium-term perspective, of being aware of the risks to your fiscal outlook, of sort of codifying these risks. In other words, making a very measured calculation in terms of, whether the fiscal path makes sense in light of all the domestic and external shocks that could potentially hit the economy, and then think about sort of the path for fiscal policy in light of these aspects. And so we've talked about having prudent fiscal anchors, thinking about operational rules that sort of link, whether it's some sort of a ceiling or a cap on the budget or spending, that kind of link your short-term objectives with your more medium-term risk-based objectives. Having enough flexibility, as you pointed out. At the same time, you need the accountability. So, I mean, in a sense, you need a package that constitutes a framework. So we're not advocating a specific numerical rule, but we're advocating a package of policies and frameworks and institutions that make up sound fiscal frameworks. And here, many countries have also increasingly adopted fiscal councils. They vary in their degree of effectiveness and strength. Whether or not you have a fiscal council, I think that's not sort of the question. Canada, for instance, has a parliamentary committee that sort of provides costing of political initiatives. Other countries have varying degrees of the fiscal councils in other countries do perform varying degrees of functions. The important point is, do they have the technical expertise? Do they have the operational independence? Are they being able to talk about fiscal policy in the correct way in the public debate? Because what you really want to do is to shape public discourse. And are you being able to do that?
Yeah, very good. So get into some of the questions we have from our online audience. A question from Luke Symes, who says, can you talk more about the evidence on the effect of debt levels and inflation and interest rates, the relationship between public and private debt levels? I guess what level of public debt is too high? Perhaps links a bit to another question we have as well, talking about there's been a debate or a discussion around good and bad investments with public debt. So some debt can be good, some debt can be not so good, such as borrowing for infrastructure can be good, creating positive returns on investment. So how do you view these narratives as valid and worthwhile for the public, or is it better to simply consider fiscal sustainability as a whole?
I think that it's important to consider fiscal sustainability, but I think that's a big umbrella. I mean, it's important to think about well, what is a sound level of debt for a country? There is no easy answer to that. I don't have an answer. I mean, this question of what's the optimal debt level has plagued economists for a very, very long time, and there is no the jury's still out. What's the optimal level? Is it 100? Is it 60? Is it 40? It's really hard to say. It depends on the country's capability, institutional capability, its capacity to repay its debt, the nature of the debt, who holds the debt. So it's a very complex question in terms of what is the optimal level of debt. That said, countries think about prudent fiscal anchors. They don't want to go. They don't want to exceed. Now, COVID happens, and countries obviously were flexible. This was a pandemic that required quick fiscal response. So countries have exceeded whatever they thought was a prudent level temporarily. So I think it's hard to pin down what is an optimal debt level. Now, that said, countries have there's different tools available to sort of think about what is a specific in a specific country context, what does it mean, or how high could it be and such. When it comes to investment, I think as Oscar, I mean, since you were here at the fund, at the executive board for a while, we've long talked about the importance of public spending efficiency. In fact, I should advertise the next fiscal monitor that is going to be released in 2 weeks. It's going to be actually launched next week and the week after. It's going to be on public spending efficiency. So how spending smarter is a really important strategy for countries where you have more limited room for maneuver. And spending efficiency and investment efficiency clearly is an important part of that story. So when it comes to sort of thinking about investment, again, there's a macroeconomic component. What are the multipliers? What kind of impact does it have on the economy? How efficient are spending? These are the kind of questions that we ask ourselves when we're thinking about the macroeconomy, and presumably governments do the same.
Yes, very good. And we're very much looking forward to the fiscal monitor coming up later this month, and certainly spending efficiency and the composition of a fiscal consolidation is of strong interest to us here at the New Zealand Treasury. So we will look forward to that analysis. See that we have a question here from Benjamin Stubbing, who's asked about beliefs. So you painted this picture on public perceptions, and so Benjamin asks, suppose you can nudge one belief or norm about public debt by one standard deviation. Which belief moves the technocrats' feasible set the most, and what fiscal policy would you introduce or change the next day that you can't do now? Would you shift acceptance of running primary surpluses in good times so you could lock in expenditure growth rule, or perhaps something else?
That's a really good question. It's a really difficult question to answer. People's beliefs are complex. I think you could believe in the same hand, you could believe that debt levels are really high, and you can completely be wrong about what the debt level in your country is. So I mean, at the same time, you may be afraid that the incidence of a particular reform or the burden is going to fall on you, and so hence you vote against it. But actually, it could actually mean that your public finances become more sound, and as a result, the overall macroeconomy improves. So it's really hard to say what would you nudge. But I think what our analysis does point to is that people's beliefs and perception. There's a lot of misperception, and there have been studies like ours that have shown that there is also the people are not very clear about trade-offs. So when you ask people to rank, sort of have some sort of lexicographic preferences over, cutting certain types of spending, or when you give them a combination of policies that they need to think about or they need to reflect on together, they will say, well, yes, we need debt to be lower. We don't like debt, but then they will never sort of be able to square the circle in terms of which spending or tax increase and so forth. So it's really hard. It's a hard problem to nudge overall. But the point remains that the fact that there are these misperceptions and the fact that people are not always clear about trade-offs or how fiscal reform efforts will impact them means that difficult reforms don't get undertaken. They're not well communicated, people don't understand them, and there can be a backlash. And so the reforms that are needed essentially don't get undertaken, and there's sort of the kicking the can down the road kind of a policy making that tends to dominate.
Yeah, I wonder, building on that, what we do know about how people reason about fiscal policy. So you obviously had the treatment, I think, of factual information about fiscal metrics, and that seemed to shift people's views. Perhaps you could talk a bit more about that. I'm thinking also of, the work by Stephanie Stancheva at Harvard,
Yes.
which looked at tax policy, and it seems like people there also have knowledge gaps, but their views can be shifted with information being provided, but specifically information, particularly about fairness, about equity, that resonates. Treatments with economic analysis or efficiency, information about the efficiency of tax systems seem much less effective. So perhaps there's some insights there for how we actually design communication strategies around fiscal policy.
Yeah, so in our study, we had a pretty simple experiment, but in previous work, we looked at people's perceptions of climate change. Again, this was 26 a survey of 26 countries around the world, and there we found two important things. Well, first, when you ask people to rank sort of a whole range of policies, what they prefer, carbon tax or sort of subsidies for clean energy and what have you, they always tended to choose subsidies. And the reason is because the word tax has a certain connotation. But then when you inform people that subsidies actually involve trade-offs, when the government increases subsidies, if you don't want to increase the deficit, or if you don't want the government to spend much more on everything, there could be trade-offs, then people change their view. So what that made clear to us is that people often don't understand what they have to give up in order to like something. And so I think these clarifying what the fiscal trade-offs are becomes really important. And then the third part of sort of my third point has to do with the last fiscal monitor, where we looked at sort of the political economy of pension and energy subsidy reform. And here we looked at how people sort of talked about these types of reforms in the media. And we looked at different stakeholders and whether sort of having certain types of compensatory policies helped, providing the right kind of information about these reforms, sort of the building trust component, if you will, in the reform agenda, helped sort of attenuate negative sentiment towards reforms. And we did this looking at 2 million newspaper articles around the world in different languages, and sort of tried to measure how does public sentiment shift? How does it depend upon economic circumstances? How does it depend upon whether or not the government put in place some kind of a package to alleviate the burden on low-income households and such? And does sentiment shift? And we found that it does. Right? So there are a range of measures that the government could undertake in order to alleviate negative sentiment towards reforms.
And that nicely sort of gets to our next question from Diana Cook. because she's asked, do you have any further reflections on how your findings of loss aversion or people's beliefs that the costs of fiscal adjustment will fall on them hinder building support for moving towards more sustainable fiscal policy? What could that mean for how governments could communicate to build support?
Yeah, so I think here, I mean, I think this is where the communication strategies become really important, right? I mean, so as you know, the nature of the communication strategy will depend upon what people's biases are. So if there's a reform that's being undertaken and it's going to improve the overall economy, what the benefits of the reform are, why is it needed, what the benefits of the reform are, and what the trade-offs or what the costs of inaction are. I think Stephanie Sancheva's work and other surveys have found that sort of communicating that to people, what it really implies for them, whether it's on equity grounds or other grounds, and what are the trade-offs, what are the implications of inaction, resonates with the public. But the discourse has to happen, and I think that's the bottom line. And if as we find in the manifestos, the discourse is sort of shifting towards more goodies and sort of, you know, more spending rather than restraint, then there can be this kind of a cycle where these kind of ideas, if you will, get entrenched in discourse, and so people tend to expect, or citizens expect the same, more of the same from governments. So finding a way to sort of communicate what the importance of these things to them, drawing on different behavioral insights, I think can be very, very useful.
Yeah, it seems like a really fruitful and sort of fascinating research agenda ahead that you're sort of pointing to. It sort of raises the question of incentives, right, in terms of the political actors to respond. And I guess that links a bit to a question from Melanie Blow Dela Cruz, who asks, what are the potential economic and political consequences when a government fails to uphold its commitments to citizens? And how might this erosion of public trust affect national debt management and investor confidence?
I mean, I can't speak to any specific countries, but you know what we have seen, even of late. I mean, there have been protests by citizens around the world. I think in a lot of countries where people feel that because of governance issues, because public policy has not been fair, or there's a perception of lack of governance or corruption that is impacting sort of their lives, their opportunity set shrinks. I mean, we've seen this in different parts of the world, so this is not an uncommon occurrence. How it translates into, I mean, it's hard for me to sort of extrapolate from my research and to say, well, this is the outcome. What we do see is that, interestingly, even from my research, that people who tend to who report trusting the government more seem to be more open to the idea of or more open and understanding of the need for reform. And I think that was an interesting insight from our research. So I'm going to flip your question the other way around and say that, well, okay, you know, how is it that government can build that trust, that accountability in terms of their public policy, in terms of their fiscal actions and reform efforts? I think that's an important question for policymakers to think about, and the answers probably vary from country to country.
Yes, indeed. Perhaps could go back to your work on fiscal discourse as well. So you, I guess you made a couple of points. So one is that beliefs seem to be, you know, sort of coming from the manifestos. It's not simply a demand side effect that, you know, the manifestos are responding to fiscal space or conditions or demands from voters. So perhaps you could tease out a bit how you think about the sort of demand and supply side of fiscal ideas. And you also noted that foreign ideas, you know, impact on domestically. That was your instrument. I guess, could you talk a bit more about that linkage, perhaps from foreign to domestic? I guess there must be some common trends in terms of fiscal space as well, right? If you think about global neutral interest rates have been falling over the last few decades, and that's probably been a common effect in terms of countries' levels of fiscal space, at least for advanced economies.
Yeah, no, that's a good question. So, I mean, I'm not going to claim that we decisively answer this question that is this a supply of ideas or is this the demand for ideas, right? Because you could imagine that the two are sort of intertwined. Disentangling the demand from supply, is it that political parties are just supplying random ideas that politicians are grasping, or is it that there is a demand for social spending? And one could argue that, in a world with greater, say, political polarization, in a world with aging populations, is it so surprising that manifestos are increasingly promising higher social spending, right? I mean, so there is that question of is it really just supply side or is it really just the demand side? Now we try to take a stab at it in our paper. We try to sort of say whether the sort of, can you link this back to voting behavior, or sort of whether these parties, how these parties fare in elections. So we found less of a support for the demand side of an argument, but it wasn't decisive. It wasn't conclusive, I should say, right? Because I think further work is really needed to understand what is it. There must be some longer term structural patterns in societies that are driving this greater expansion discourse across countries. And it's not just an isolated incident. And what's interesting is that it's not just a phenomena that's relegated to, say, left-leaning parties. I mean, across the board, if you look at party platforms of, if you line up all the political parties along a spectrum, and then you sort of look at the time series, you see that increasingly parties of all stripes are talking about greater expansion discourse. So then that perhaps point to the fact that maybe this is demand driven because the citizens expect this, and yet we can't conclusively say that either. We don't really know, and I think that further work could really identify what's really the source of this rhetoric, and I think having a deeper understanding of the structural forces at play, the longer term structural forces at play, would be important. Now, in terms of the causal relationship in foreign discourse, so as I said, when we first started thinking about these relationships, a natural question comes to mind. Well, okay, you're showing the link between changes in discourse and changes in net discourse and primary deficits. What is happening to primary deficits? But there could be a two-way relationship between the two, right? I mean, it's sort of there's a fundamental problem of endogeneity. You can't really say one causes the other because it's hard to disentangle, as you precisely said, the demand and supply factor. So it's kind of hard to say what's causing it. So what we thought of, I mean, in the paper we do different things, but what I showed you is that we said, okay, well, what could be related to a domestic discourse? So if you're a particular political party with a certain ideology, presumably you're influenced by similar types of rhetoric in another country by a political party of a similar ideology. So we use that relationship as to identify the causal link between changes in net discourse and increases in social spending and primary deficits.
Yes. Yeah, very interesting indeed. Got a question here which sort of goes to timeframes. You talk about these long-term sort of narrative shifts. So Benjamin Stubbing asks, are there changes to posterior beliefs sticky? 6 months later, do people revert to prior narratives, or do beliefs compound with repeated signals? If they decay, what cadence of COM sustains this shift? I mean, I guess perhaps to put it another way, should we be thinking about, narratives can shift over short-term electoral cycles, or are we really thinking about sort of long-term secular trends here?
Well, the stylized facts that I showed you show a long-term trend, right? It's sort of from the 1960s onward. So to me, that looks like a structural trend. And when we looked at the impulse response functions that I showed, look at the change in net discourse from one election to the other. And so we know exactly when the election happened, and then we're mapping out that as net discourse, say, increases from one election to the other, as it changes, social spending is increasing. So in a sense, these kind of narrative shocks, if you will, are translating into, over time, over the medium run, into higher social spending, higher primary spending, and higher deficits. So they don't decay clearly, and you can see this in the data, in the raw data, and also in empirical analysis.
And perhaps building on that, could you talk a bit more about, I guess, the role of shocks, exogenous shocks, both in sort of perhaps shifting regime or narratives in some sense? I mean, you had the chart with forecast errors. It was seemed incredibly high, right? The sort of average forecast errors. You said partly growth disappointing, probably partly shocks, partly governments not executing their plans. How significant are those different factors, and I guess to what extent? Because we have seen, repeated shocks, and the fund is talking about a more shock-prone world. So it's certainly been a feature of our analysis, particularly in our long-term insights briefing, of the sort of ratchet effect where shocks have compounded and led to a significant upward trajectory over time in public debt, which might feed back into the fiscal discourse.
Yeah, no, I think that's a good point you make. I mean, and these forecast errors, these are 5-year ahead forecast errors, and using the World Economic Outlook data. So clearly, you see this sort of bias across all countries. It's not just a story where you say, okay, this is bad forecasting in countries where you have limited capacity, and this is very evident in the case of advanced economies as well. And then when we did a decomposition of which are the factors that contribute to this, we found that sort of in equal parts it was sort of assumptions about growth and about fiscal adjustment or fiscal efforts that don't quite pan out as they're expected to. Now, what does this imply for the future? Well, I mean, this is the point that I was trying to belabor, right? Which is that debt could well be worse than we think. So the starting point, in other words, the medium run could be worse than we think. Then on top of that, you pile on sort of the longer term pressures that you referred to, the aging and pension and healthcare costs that are looming. Then you sort of get a situation where we need to think about it, but fiscal currently, but also from an intertemporal perspective. I mean, what does a fiscal look like over time, right? So I think these are very important questions, which is why I wanted to start with the risk and the debt story first, to just kind of lay the ground for why everything else that comes in matters so much, the discourse and perceptions.
Very good. Got another question here from Kim Martin, who actually heads up New Zealand's debt management at the Treasury. She says, thank you for the really interesting insights into political and public discourse and beliefs. Have you done any work on discourse or beliefs of investors who ultimately buy the government debt? Ultimately, the willingness of investors to buy government debt will impact on the cost of debt, which feeds into sustainability of servicing.
No, I completely agree with you, and I think that's what I was described when I first was embarking on this project on public perceptions. I was speaking to some really excellent macroeconomists and sharing my idea, and their first view was like, why do we, okay, the public perceptions matter, but what about what investors think? And I think that's an excellent point that you make. I think we should be thinking about this. One could argue that where I sit currently, there's sort of an exuberance in markets that nothing could go wrong. So there are concerns. Obviously, I showed you this figure with the term premia, and if I were to plot this for a number of large economies, you do see an increase in the term premia. And when you decompose the term premia into the inflation component and the real risk premia, which sort of is capturing perhaps perceptions about long-term fiscal sustainability, have risen recently. Is that sufficient? To be a wake-up call? I don't know, but I felt that from a citizen perspective, it's also important to understand, because there's reforms inherently have a political economy component to that. And they can be painful. They're winners and losers. So understanding how people think about these types of issues or think about fiscal policy also becomes very important. From a political economy perspective, it's really important. And the success of reform efforts can depend upon, if there's vast misperception, if everyone believes that they're going to be very negatively impacted by these reforms, it's almost going to be impossible for policymakers to carry them out. So I think that's the angle that was a little less studied. And so we wanted to focus on that aspect.
Very good. Probably got time for just one or two more questions. There's a question here from Diana Cook who asks, do you know to what extent the concept of intergenerational equity has been a feature of the public discourse on fiscal sustainability? Do you have a sense of whether people in different countries understand the impact of debt on future generations? Do they care? Is it helpful to encourage people to think about the legacy we want to leave to future generations?
Yeah, no, I think that's an excellent point you make. In fact, in our survey, I haven't shown the paper is out, so I do encourage you to read it, because we did ask a specific question to people, like who's going to pay, who's worse off, future, sort of the current taxpayers or future taxpayers. And I think in depending upon people's priors and depending upon their understanding, if you have experienced fiscal consolidations in your lifetime, or sort of you've seen these large reform efforts in your countries, you are more likely to understand that future generations have to pay the bill. So there is also an understanding issue in how you think about debt, and I think making this a part of public discourse is really important, because intrinsically there's a trade-off between current taxpayers and future taxpayers in terms of who will pay. And this aspect is often not discussed as much. And this is something that we are thinking about also in the Fiscal Affairs Department, the intergenerational aspect of the intergenerational equity aspect of this fundamental question of who shall pay or who will pay.
Very good. And perhaps one last question. I see Harry Sharma asks, how do you see embedded corruption and weak institutional frameworks in developing economies contributing to fiscal mismanagement?
Yeah, and this is in the October 2024 chapter, the Fiscal Monitor chapter, we actually had some interesting work that we showcased where you have these large sort of arrears showing up in sort of your debt forecasts. And so, you think your debt is a certain percent of GDP, but actually because of contingent liabilities, it could be mismanagement, it could be corruption. Your hidden debt, if you will, is actually much larger than you think. So the cost, if you will, to the public purse is much larger. And we were talking about sort of protests around the world in many countries. This is again a fundamental issue of transparency, accountability, trust. It comes down. It comes down to that, and trust in public monies, and trust in the conduct of fiscal policy.
Very good. Well, yes, unfortunately, I think we've run out of time, and we've had a lot of great questions and some excellent answers, Era. So thank you very much for taking the time to share your insights and experience with us. We really value our membership of the fund, and it's that opportunity to engage with such deep experts who bring both huge amount of insight, but also some really practical guidance as well. I think for us and at the Treasury, we are in the business of communicating on fiscal policy. So I think we'll be reflecting quite a lot on your talk today. I want to also thank our audience. Thank you to everyone who joined us online for the talk, and also for some very good questions. And I'll just note our next seminar in this series will take place on Wednesday, the 5th of November. We'll hear from Carolyn Nerlich, a senior lead economist at the Fiscal Policies Division of the European Central Bank. And Carolyn will share her insights on fiscal instruments and policies available to different countries to manage the climate change challenge. So more information will be available soon on Eventbrite and our website. So I'll just close our seminar today and farewell you all with a karakia, piki te kaha, piki te ora, piki te wairua, uye, tai kia. Thank you everyone for attending. Mā te wā. Goodbye.
Thank you very much. Bye-bye.